Happy New Year. Now that the celebrating and gift giving is behind us, it's time to focus on paying the bills and avoiding COVID. The sooner you pay off your credit card debt, the better. Whether you realized it or not, you began building your credit score with your first credit card or loan. Your score can move up or down, and it's going to shadow you around for life. It becomes a factor when you apply for a mortgage or an auto loan, rent an apartment, purchase an insurance policy, and even apply for a job. So here are 5 contributors to your credit score. Payment history. This is a big one. Pay your bills on time because it counts for 35% of your credit score. Amount owed. This is fairly large as well. It contributes 30% to your score and refers to your credit utilization ratio. What proportion of your credit limit are you using? If you max out all of your credit cards, it will impact your score. Length of credit history. The longer credit history you have, the better, assuming it's positive. The age of your oldest credit line and your average age of all your credit lines are added together to make up 15% of your score. And keep in mind that closing a credit card could negatively impact your credit score, because if you do that, your total credit limit falls and your credit utilization ratio rises. Credit mix. This figures in for about 10% of your overall score. It's a combination of revolving credit, such as credit cards, and installment credit like mortgages and student loans. And then new credit is the final 10%. New credit is a combination of new accounts opened in the past year and how long it's been since you opened your most recent account. New credit is tracked by how often somebody, has an inquiry into your credit report. Each time you apply for a loan, the lender runs your report and it counts as an inquiry. Now, you proactively checking your own score at either annualcreditreport.com or directly from one of the 3 credit bureaus does not count as an inquiry. Which brings me to checking your credit score. You should do this. It's important to either subscribe to a credit monitoring service from one of the 3 bureaus or check your credit score annually to make sure there are no mistakes and that no one has attempted to steal your identity. You can check your score in the following ways. Annualcreditreport.com. Federal law allows you to obtain a free copy of your credit report every 12 months. From each of the credit reporting agencies, or you can go to each one individually, TransUnion, Equifax, or Experian. Now, each one's going to give you a score. What does it mean? 800 and higher, you have excellent credits. 740 to 799 is considered very good. Good is 670 to 739. Fair, 580 to 669, and below that is poor. So it makes sense, and it saves dollars to pay your holiday bills on time and in full if you can. Cheers to a happy and healthy new year and to an increase in your credit score.
One of these days I wanna be back.